a lot of people, apparently more than 50% of people, think that there's going to be a recession, and that's a useful fact to know, right? That means that there are still market participants that could be participating, potential participants, but they're not participating. It is November 15th. It is a Friday. The markets are closed. The weekend is upon us. This is, of course, the video log that takes $30,000 to a million. And today, after I show you the account, I'm going to be talking about the wall of worry and how I use that to try to time some investments. Now, timing investments is, of course, usually a fool's errand, but so what? Call me a fool. I'm going to try to time some things. I've been trying to time the silver market for quite some time now, and I've been successful at times, unsuccessful at other times. Have not, obviously, my latest trade with EXK didn't work out, but hopefully the overall silver market will move in my favor in the future. I'll show you some of the moves that I made here. So let's go to the account. I'm sitting at almost a new all-time high. I'm over 75,000 due to a little aftermarket action. It's a bit of a bittersweet high in the account at the moment because it could have been a lot higher had I played my cards right when it comes to Apple and some call credit spreads that I saw that weren't profitable and in fact end up making me lose some money. And those are just lessons, and so hopefully I learn from these mistakes and not put up so much money, so much collateral up for these trades in the future. Now, I lost two of them, two of the call credit spreads out of like 11, but they were in a row, and they were kind of bigger than the rest of them, so it kind of makes up for all my credit call spread selling on this account anyway. Maybe I'm winning just a tiny bit. Okay, now let's see what's going on in the account here. Besides these massive option plays that are going on, EXK finished fairly flat. Apple, a huge $500 gain or so. I did not participate in much of that, as you may know. I have a call credit. I'm sorry. I have a call sold against most of these stocks, 100 of them. So even though the Apple stock gained $481, my options lost 282 of those. So my total gain is about $200. Where the other bulk of the gain came from today was Cameco. And as you know, I'm very heavily invested into selling options against chemical stocks and cash. So the gain for today was $135 with another gain of 33, erasing some of my liability there for my put calls especially. The stock is sitting at around between $9 and $10, which is the whole basis of this sideways move that I've been selling ever since from a year and a half ago. The stock's been moving fairly sideways, which is great. Now, uranium is showing some signs of life, but I'm not gonna really jump into anything right now. I did buy some energy fuel. As you can see over here, I'm sitting at 2,500 total money invested so far, negative $232 or 8.45%. Today it was up $48. But these mining companies are really risky to invest in because they have a lot of expenditures and zero revenue, right? They have zero mining going on right now at these prices, so they can bleed the stock for a long period of time. So you got to really be careful when putting some money in there. I have about $848 into URG, and I'm sitting pretty flat on that right now. Okay, so that's the account. And now what am I talking about when it comes to climbing the wall of worry? What is the wall of worry? Well, the wall of worry is the overall perception of the market investors. All right, so there was a survey that came out apparently. I didn't read it myself, but I just heard about it. But the fact that I read or didn't doesn't really matter. What matters is that apparently most people think there's going to be a recession coming up pretty soon. I mean, granted, we haven't had one, a real deep one, anyways, since 2009, the stock market of crash of 2008 and the recession of 2009, and a lot of people, apparently more than 50% of people, think that there's going to be a recession, and that's a useful fact to know, right? That means that there are still market participants that could be participating, potential participants, but they're not participating because of their views. There's probably a lot of cash on the sidelines. I know for a fact, and you guys know that, Warren Buffett has like 120 billion worth of cash on the sideline that he's not investing in, and this market's been just roaring higher, and people are either chasing it or holding on to cash, but there aren't any sellers. Okay, so nobody's selling the market. No one wants to sell into this bull market until there's a sign that it's petering out, right? And that sign just isn't there, and so the market keeps going higher and higher, and so I can use that information, and to me, what that tells me that there isn't going to be any significant correction in the future. And if there is a little correction, like over the winter, for example, how we've had in the previous few years, it's going to be quickly bought. The bottom is going to be, definitely heavily bought by the dip, right? And then the market's going to go higher until something changes, until something fundamental changes, not just in the economy, but maybe in the the monetary situation or abroad. Some things have to start failing in order to excuse me, to cascade an effect of defaults around the economy, whether it's globally or domestic. It doesn't really matter at this point. And it's probably going to be something we're not seeing. In 2007, very few people were seeing the fact that the housing market was succumbing under its own weight, and the incentives weren't wrong, and all this debt was accumulating. People are starting to default, and so many people are just whistling past the graveyard, and the vast majority of people, rather, in the media and just investors, and they were just thinking just like we are today. Everything's fine, nothing to worry about, and no one really saw this. Virtually nobody saw this coming, and so people lost their 401ks and savings and everything else, and some people got scared and lost it and sold at the bottom, and that's really unfortunate. They've been very conservative in cash ever since and missed out on this enormous, the biggest bull market in entire history. And some people, there's a saying out there that says the bear market is the authors of bull markets and so forth. So if the bear market is the author of this bull market, I mean, it was pretty correct. It's a pretty epic downfall, like 50% in stocks, and equally so, it's been a very epic bull market in the overall stock market. So very interesting stuff right there. And it doesn't seem, according to this pessimism, to me, what that tells me that this market still has room to grow. Now, obviously, it's not going to be in a straight line. No market travels in a straight line, but I don't think, based on the current optimism, that we're nearing the very top of this. There's more room. So if you're in the stocks, like, that's my opinion right there. Just so you know, I'm not a financial advisor. This isn't a financial advice. This is just my opinion, and I'm not a professional. Make sure you do your own due diligence and make sure you understand the risks before you're investing in the market. So you might lose all your money. So just because I think you should buy the dip doesn't mean you should. Okay. I'm just some dude posting a video log on YouTube about my own progress in my account and showing you how it's traveling. And hopefully you're doing the same, right? Hopefully you're trying to grow an account to 1 million or more. The million shouldn't be the cap. Obviously, that's just what this blog is about, video log rather. Now, I was thinking of what I would do when I did reach $1 million with this account, and I'm thinking about starting a series of Robinhood Millionaire, and I'll probably just use this money at the ones that are over $1 million to just spend them around the world and probably do like lifestyle videos of me spending all this, Robinhood millionaire style. Just maybe like the cheap version of bowling out and just go on a bunch of vacations, just spend the extra money. I don't know. Just mulling some more ideas. Obviously, I'm very, very far away from doing that. The account is only at 75,000, and I have to get to 1 million. Um, but granted, I've more than doubled this account in the last year and a few months, so I'm very happy about that. Um, anyway, I think I'm gonna end it right here. Near all time high. I'm not very confident and satisfied with it because it could have been a lot higher. But maybe if I hadn't lost that like $1,200 on EXK earnings call or the credit call spreads, it could have been another $2,000-3,000 higher. Anyway, such is life. I live and learn. Hopefully, the moves I make from here on are smarter, just like I have made many smart moves in the account so far, and it brings me closer and closer to that $1 million target. Hopefully, you all are making more money than me. Shouldn't be that hard to do in the last few weeks, but I'm gonna sign out right here. I'm gonna probably make another video on Monday night. So hope you all are doing well and making a ton of money. Peace out.